Investing Basics, Demystifying the Market. Investing is about purchasing assets with the expectation that they will grow in value over time. Unlike saving, investing allows your money to work for you by generating returns. What is investing? Stocks. Buying shares in a company provides ownership and potential for high returns, but comes with market volatility. Bonds, a safer option. Bonds involve lending money to governments or corporations in exchange for fixed interest payments. Why invest? Wealth growth. Investing allows your money to compound over time, increasing its value. Financial goals. Whether saving for a home, retirement, or education, investing helps you achieve key milestones faster. Inflation protection. Investing helps counteract the effects of inflation, preserving your purchasing power. Setting financial goals, short-term, saving for a vacation or emergency fund, 1 to 3 years. Mid-term, buying a home or paying off debt, 3 to 10 years. Long-term, retirement planning or funding a child's education, 10 plus years. Strategy 1. Diversification, spreading risk. Diversification minimizes risk by investing across different asset classes, industries, and geographic regions. Low-cost index funds. Index funds provide exposure to a broad market while maintaining low fees, making them an excellent choice for beginners. Strategy 2. Dollar cost averaging. Consistent approach. Dollar cost averaging, DCA, involves investing a fixed amount at regular intervals, regardless of market fluctuations. Riding out volatility. By purchasing assets at different price points, DCA helps lower the average cost of investments over time, making it an effective strategy during market downturns. Strategy 3. Compounding. Snowball effect. Compounding occurs when your earnings generate additional returns. Over time, this cycle accelerates wealth accumulation. Time is your ally. The earlier you start investing, the more you benefit from compounding, making time one of the most powerful tools in wealth creation. Final thoughts. Investing is one of the best ways to build wealth and secure your financial future. Here are some key takeaways. Set clear goals. Define your financial objectives to guide your investment decisions. Diversify your portfolio. Minimize risk by spreading investments across different asset classes. Stay consistent. Invest regularly to benefit from dollar cost averaging. Maintain a long-term perspective. Focus on long-term growth and avoid short-term market fluctuations.